Food retailer Shoprite reported an 18.6% rise in first-half profit to 280 cents, helped by higher prices, a favourable exchange rate and above-inflation wage increases for consumers in its main South African market. Shoprite sales for the period ticked up to 13.2% to 41 billion rand. The company decided to defer the declaration of an interim dividend until after the 1st of April 2012. Jean Pierre Verster, let me begin with you. Shoprite, one comment I had from one shareholder who I shall not name because then you might be influenced, was this is a very well-run company and they very much like the fact that the results came in at the level that they did. When you look at the overall numbers, what was your sense? Any disappointment before we talk about what you are happy about?
No, I think on all metrics, Shoprite came out with a very, very good result. They increased the operating margin. They showed very robust top-line growth. They managed their cost growth very well. So there weren't any disappointments. Maybe some analysts would like to see more of a leverage effect from revenue to operating profit. Because if you are growing your top line at more than 13%, you would expect for a retailer, for that business model, to increase profits at maybe at a clip of more than 20%. But one could understand in this 6-month period that they had, that because principally of electricity price increases, that even a profit increase of more than 18% is very commendable.
So what made you the happiest when you looked at these numbers?
The happiest is that they are apparently taking market share. So if I was a shareholder in Shoprite, I would probably stick with them because it seems like their strategy is working, specifically also at the lower end with YouSave and at the top end with Checkers, taking more of the higher LSM market share away from the likes of Pick n Pay and even Woolies, some would say. So it's the continuing good performance from Shoprite that really impresses me.
Absolutely. Craig, let me come to you. I spoke to Whitey Basson in one of our programs and I asked him about the whole issue around competition. He was very modest because he said, yes, they are taking market share, but he didn't give me any numbers. In the statement to the stock exchange, they cited AC Nielsen numbers. Clearly, Shoprite is steaming ahead here. But how much more remains in this business, do you think?
Yeah, look, I think that they're boxing very smartly. Of course, we're going to see Massmart's results out tomorrow, but I'm not expecting growth in market share to the extent that we've seen from Shoprite. I'll talk about that a little bit later too. But if we look at certain things, we just saw JD Group's results. Their furniture division in the Shoprite Group's done exceptionally well, nearly 20% growth. They're in the LSM 5 to 7 sort of category, a good solid company, only 30% of that in credit. I think they said they're going to roll out another 9 stores up until June in the furniture side. So there's that growth. There's also growth on the African continent. One of the problems in the past was getting premises, but they're looking at that they're operating in 17 countries at the moment. The DRC is one of them that they're rolling out into now in the next month or two. So that's, I think, where the growth is going to come from on the African continent, and it's pretty exciting.
Absolutely. When you look at their numbers, of course, you have to say Whitey Basson is doing a very good job. Now, this is a guy who has seen the departure of 2 Pick n Pay CEOs, if you like. Sean Summers, we saw depart, and then we also see Nick Badminton come in and go. So if we heap a lot of the good stuff that we see coming out of Shoprite to this one man, how big a risk is it that he has to retire at some stage? And if he does, is it a concern?
Are you talking to me?
Yes.
Sorry. Yeah, no, look, I think certainly that a lot of this, the pat on the back can go to Whitey Basson. He's been exceptionally good. If you think back in the early days when he acquired OK for R1, didn't know what he was going to do with it, but he certainly is a large part of the story, but I don't think he's the only part of the story. I mean, the systems in the company is very good. The way the whole logistics operates exceptionally good. The management team have managed to control costs, and so I think it's a very well-oiled machine that even if Whitey Basson disappeared, things would still run very well. Yeah,
Jean Pierre, would you buy this just based on Whitey Basson's presence, or is there more to the company, as Craig is suggesting, than Whitey?
Well, they've got 99,000 employees. Whitey Basson is only one of them, but he has played a critical role in terms of some of the strategic decisions that Shoprite has made, and probably one of the most important decisions which differentiates Shoprite from the likes of Pick n Pay is that they decided to centralize the distribution many years before Pick n Pay only recently decided to do.
I definitely remember 3, 4, 5 years ago.
Yes, so it shows you that even though it's one man, and if you look at his remuneration, he's getting remunerated very well for his role.
You're not complaining?
I'm not complaining, because the value that his decision-making, his strategic decision-making has added to Shoprite has been even more than the remuneration that he personally has taken from Shoprite. So I appreciate his very good management skills and his strategic thinking, but I do say that at the current share price, Shoprite is probably priced for the management, the business model, and the dominant position that they have.
I looked at the outlook statement, and let me read part of what I got. Satisfactory. They are saying satisfactory growth in turnover and profitability. This is for the second half. Did you get any sense out of it that there could be more than what we saw in the first half year?
It will probably depend on what happens to food inflation, and that seems recently to be accelerating. So if that means that the top line growth will still be in the mid-teens, and they can suppress cost growth to a lower level than what it was in the previous 6 months, then you could see profit growth for the full year being even higher than the first half. And I think a lot of people are hoping for that.
Absolutely. But if you look at what they did with costs in the first half, I mean, store inflation, you were looking at 5% versus 9.3% at the food level, at the national level. Surely they've got costs under control, you have to say.
They have, if you look at the GP margin, the specific food input that you're talking about. But remember, they've got other costs as well.
Sure.
Property costs, electricity costs, labor costs, and those costs are running at quite a higher level. So if you see a decrease in the level of cost growth, specifically of those other costs, that would be really good for Shoprite.
Craig, so what's the risk then of investing in Shoprite at this level, at the current pricing that we're seeing now?
Well, I think the risk isn't so much in terms of it being a good company. I think the risk is in terms of, you now entering at a very high level. And, you know, to try and time the entry into the company, one probably would look at technical analysis. The share price has run up quite a bit. The RSI is not really confirming it. So it may not be the right time. All retailers have moved up in terms of the price. So that might be the risk that you're getting too soon. But on a 10-year view, that risk then sort of dissipates a little. But I think there's a good growth story. I mean, they've indicated 42 stores, I think, or 40 odd stores over the 6 months up to June. If you equate it to June 2013, there's another 139 stores. So growing from 1,730 stores at the moment, it's a good story, especially in the foreseeable future, 2012, 2013.
Yeah. Craig, I'll come to you for our first hot or not, but I want to premise that hot or not on a specific time frame. Are we talking short term or long term here? Give me your answer, and then I'll follow up with what sort of time frame we're looking at.
Yeah, so in the short term, my answer would be not hot. I think it's run a bit hard. In a long term, 7 to 10 years, which is really where you should be investing in equity in that type of time frame, and certainly it is a hot story. Hot
stocks in the medium to long term, that says Craig. For you, Jean Pierre?
I would agree with that. The way you make money is you buy stocks when they are cold in the eyes of the market, and they then become hot, and that's when you generally sell them.
Right.
So I wouldn't be selling my Shoprite yet, but I wouldn't be buying them either. It's a bit highly priced for me, but a great story longer term, red hot for the long term.